Welcome back to Accounting Cave, episode 3 of our management accounting series. But before we continue, please subscribe, like, share the content, and press the notification bell so that every time I upload a new video, you get to be notified. In our previous episode, we learned the types of costs and how they are classified. In this episode, we'll be going further to cost estimation and forecasting. As usual, in every topic, we start with some definitions of terms. In this topic, let's define what's cost estimation. It's a procedure used to measure costs of various items used in the process of production. The other term is cost forecasting. What's cost forecasting? It's the process of accurately determining in advance the cost that will be incurred in the process of manufacturing a particular product over a given future period. As the name just suggests, forecasting. So you are predicting the cost which will be incurred in future. Now let's discuss the different methods of cost estimation and forecasting. Number one, it's the ILO method. This method examines cost at high and low levels, making an assumption that the increase in costs between the two levels is directly due to the increase in activity. Two accounting periods are chosen, one with high activity level and another one with low activity level. Let's apply the ILO method in an example which is I think you can see on your screen. So we have a table which has the batch size and also has the labor cost in shillings. So we can see the batch size and the corresponding costing of labor. So we'll be doing this step by step. So the first thing is the method suggests that it's ILO method, which we've said it takes the highest and lowest activity level. Step 1, select the highest and lowest level. For example, we have the highest level is 30, which is the last one. And also, we have the lowest activity level, which is 9. Now, after selecting the highest and lowest activity level, we go to step 2, which is we select the corresponding highest and lowest cost. So, for our first activity level, which was 30, the highest activity level was 30. So the corresponding cost will be 320. To our second one, which is the lowest activity level, which was 9. So we select the corresponding cost, which is 110. Now we've chosen the highest and lowest activity level and their corresponding costs. So the third step will be the difference between the cost and difference between the activity level. Our highest cost was 320, our lowest is 110. So the difference 320 minus 110, we get 210. To the other side, which is the activity level, our highest activity level was 30 and lowest 9. So the difference between 30 and 9, we get 21. Now we have the difference in cost, which is 210, and the difference in activity level, which is 9. So step 4, we divide the difference in cost by the difference in activity level to get the rate of variable cost. Rate of variable cost will be equal to 210 divided by 21, which will give us 10. We go to the next step, which is step 5. We compute fixed cost by subtracting variable cost from total cost. Automatically, we know that total cost is equals to variable cost plus fixed cost. So to get fixed cost, we take total cost minus the variable cost. Total cost is 320. Variable costs, we've got the rate of variable is 10. So we take 10 multiplied by the batch size, which was 30. So we get 300. So fixed cost will be equal to 20. So far, we've computed the rate of variable cost and the fixed costs. So in step 6, which is our last step, we formulate the linear prediction equation. Also, let's remember in our example, we were required to formulate linear prediction equation and estimate total cost of a batch of 35. So in our linear equation, which is y is equals to a plus bx, where y is the total cost, a is the fixed cost, b is the rate of variable, and x is the number of products to be produced or the batch size. So to formulate the linear prediction, that's the part one of our question, of our example, as we were required, we formulate linear prediction equation. So our linear prediction equation will be y is equals to 20 plus 10x, where 20 is the fixed cost and 10 is the rate of variable as we computed earlier. So that will be the linear prediction equation. But in our second part of of what we are required, we are told to estimate total cost of a batch of 35. So we go further and replace x, because already we asked to we are given 35, which is the batch which we are required to estimate the total cost. So it will be 20, which is the fixed cost, plus 10, which is the rate of variable, multiplied by now the number of products we want to produce, which is 35. So 10 multiplied by 35 is 350. So 20 plus 350, which will give us 370. Now 370 is the total cost of the batch of 35, or the number of products to be produced, which is 35. So 370 is the total cost to produce a batch of 35. Now we are through with our example. We've given what we are required, we've done what we are required, which was to formulate the linear prediction equation and estimate the total cost of a batch of 35. That's the last part of the high and low method, but we also have the advantages of high and low method, which one is it's easy to use, as we've done in only in 6 steps, so it's easy to use. And the lowest and the highest item will cover the relevant range, because we always take the lowest and the highest, so there is a range in between, so they cover the relevant range. Number 3, it takes into account possible extremes of costs. Now, those were the advantages of high and low method. We also have disadvantages. One, which is it is not logical to use 2 points to represent all the points. So, like if you can see in our example, like we've ignored all the other points, we've just taken the highest and the lowest. So, one of the disadvantages, we don't take into account all the other points. Number 2, the estimated cost function poorly describes the actual cost relationship. And number 3, costs are not properly matched with their independent variables. So those are some of the advantages and disadvantages of high and low method. So now we go to the second method of cost estimation and forecasting. We can now apply the linear regression. The second method of cost estimation and forecasting example. The linear regression. As you can see on your screens, we have this is a mathematical technique from which the case where we have 3 columns. Column 1, which is the period which runs from 1 to 7. A regression analysis, the output, which is utilizes historical data to estimate the relationship between the independent variable, which is and y, also have and one or more independent variables, which is also in the values of a and b, as per the equations which we can see. We can now apply so to obtain the value of b analysis will be equal to in an example n, which is as the number of pairs of data. We have multiplied by the summation of a table xy, where we have 3 columns. The column 1, which is the period by the which runs from 1 to 7. Divide. We also have the output, which is by in a thousands. So multiply by the
output,
summation
which
of
is
x
x,
squared,
and we also have
minus the
overhead
summation of
y,
x,
which is also
then
in
we
a
square the
thousand
summation
shillings.
of x. So that's
We
how
can
we
now
get the value
apply
of
the
p, which we
linear
will later
regression
use in our
analysis
example.
method in
The
an
summation
example.
of a is equals
As you
to
can see on your
summation of
screens, we
y
have
minus
an example
b,
of a
which we
table
will have gotten by that
where
time
we
just
have
by
three
the equation
columns.
above.
Column 1, which is the
Uh,
period, which
b
runs from
multiplied
1
by
to 7.
summation of x
We also have the
divide
output,
by
which is
n,
in a
the number
thousands.
of pairs of
So
data.
output, which is x. We can now apply the linear regression analysis method in an example. As you can see on your screens, we have an example of a table where we have three columns. Column 1, which is the period, which runs from 1 to 7. We also have the output, which is in a thousands. So output, which is x, and we also have overhead y, which is also in a thousand shillings. In this example, we are required to derive a formula to assist in preparation of overhead budget for the following years, which is year 1 to 7. So to start with, in step 1, we multiply the output by the price. So x we multiply by y to get xy. So we run that from period 1 to period 7. So as you can see, I've computed the multiplication between x and y. And now you can see we have a fourth column, which I've called it xy, where it's the value of x multiplied by y for each period. In step 2, we compute the square of x. So it's the column where we have the output. So that's our x. So we square every output from period 1 to period 2. So we have the fifth column, which is x squared. So now we have the values of x squared for each period. In step 3, we compute the square of y, which is y squared. So in our column, which is overhead, that's where we have our y. So the square of every overhead from period 1 to period 7. So we have our fifth, that's our sixth column, y squared column, where we have the value of y squared from period 1 to period 7. In our fourth step, we compute the summation of all the columns. That's from the column X, where we have our output. So we add another row, which is the eighth row. After the period 7, we add a row which we call it totals, where we have the summation from X, which is 1140. We have the summation of y, the overheads, which is 5930. We have the summation of xy, which is 978,100. We also have the summation of x squared, which is 191,000. And we also have the summation of y squared, which is 5,055,500. Now we can go to step 5. Now we have the values that we need to compute for the value of b. The value of b is equal to n, which is the number of pairs of data we have, multiplied by the summation of xy minus summation of x multiplied by summation of y, divided by n, which is the number of the data pairs which we have, multiplied by summation of x squared minus summation of x squared. So we'll say b is equal to 7 which is our pairs of number of pairs of data which we have, multiplied by summation of x y, which is 978,100, minus summation of x, which is 1,140, multiplied by summation of y, which is 5,930, divide by n, which is 7, multiplied by summation of x squared, which is 191,000, minus summation of x, which is 1,140, then we square. So it will be 7 multiplied by 978,100, which will be 6,846,700, minus now 1,140 multiplied by 5,930, which will be equal to 6,760,000, divide by 7 multiplied by 191,000, which will be 1,337,000, minus summation of x, which was 1,140, and then we square, which will give us 1,299,600. So our numerators, after subtracting, so the difference in our numerators will be 86,700, and our denominators will be, the difference in our denominators will be 37,400. So we divide 86,700 divide by 37,400, which will give us the value of b, which is 2.318. Now we have the value of b. So in our next step is step 6, where we compute for the value of a, where a is equals to summation of y minus b times summation of x divided by n, which is the number of pairs of data that we have. So it will be equal to 5,930, which is the summation of y, minus the value of b, which we've computed earlier, which is 2.318, multiplied by summation of x, which is 1,140, divided by 7. So it will be equal to 5,930 minus now the value of the multiplication between the value of b and summation of x, which is 2,642.52 divided by 7. So after subtracting, we get 3,287.82 divided by 7. So we get the value of a, which is 469.64. In step 7, which as per our example, we were required to derive a formula to assist in the preparation of overhead budget for the periods which we've been given. So in step 7, we finalize our example and we derive the equation or the formula. So our equation, which is linear equation, is y is equals to a plus bx. That's our function. So a, which we've computed, we got 469.64. But remember, uh, as we started in our example, our units were in a thousands. So a, it will be equal 469.64 multiplied by 1,000, which will be 469,640, and b is 2.318. So our equation or our formula will be y is equals to 469,640 plus 2.318 x, which will, as they prepare for the overhead budget, they will be replacing x with the amount of products they want to produce. So our equation is now complete. We have y is equals to 469,640 plus 2.318x, or else you might not change the a into a thousands. You can just put it like y is equals to 469.64 plus 2.318x, but back in your mind, just remember that it's in a thousands. So now we've done our example and we finished our example. That's what we were required to derive from our example. So as the third method of cost estimation and forecasting is the scatter graph. So, as the name suggests, that's a graphical method where two parts of data are plotted as single points on a graph and then joined using the line of best fit, where the gradient of the line of best fit is the rate of variable cost and y intercept to represent fixed cost. So those are the main three methods of cost estimation and forecasting: the ILO method, the linear regression analysis, and now the scatter graph. I know there are other methods, but those are the used methods. That's why I've covered only the three. So, but if you want for me to discuss the other methods, you can also comment in the comment section for me to discuss the other methods. So that's the last part of our video today. So I hope you have enjoyed our presentation on cost estimation and forecasting. If you have any question, please comment in the comment section, or if you have any comment or anything to add, please comment in the comment section. Thank you for watching this video, and let's meet in our next episode. And for now, we say bye.